We've recently seen the US dollar begin to plummet, and given Bitcoin's historically inverse correlation with this fiat currency, this could be the catalyst to restart the BTC bull cycle. Today, we're going to be looking at Bitcoin and its relation with the US dollar or the dollar strength index, and where better to start than the dollar strength index versus BTC chart we have here on BitcoinMagazinePro.com. Indicated by the ticker DXY, this is looking at the US dollar's strength versus a basket of global currencies. And as we can see from the chart, once this is decreasing, we typically see a big rally in the BTC price action. When it's increasing, we usually see a bit of a bear cycle. And if we just zoom into the most recent cycle, we've recently seen this begin to drastically decline, indicating potentially a new period of very risk-on sentiment and more favorable macroeconomic conditions for BTC. If I just draw on the chart here, we can also see that this was basically coiling up for probably over a year now, this price action in the DXY. So the fact we had a breakout to the downside is actually quite bullish. And really, we've not seen Bitcoin react to this yet, considering we've been declining on this DXY index for a number of weeks now. And if we just go to the BTC versus DXY year-on-year chart, it may be a little bit clearer to see that this has been drastically reducing for a couple months now. And Bitcoin's price action has actually been rather stagnant, a little bit downwards, a few rebounds here and there, but really isn't indicating very bullish conditions for BTC, which is a little surprising, obviously considering their historically inverse correlation. But it's not just the DXY potentially influencing Bitcoin's price action. This impact kind of snowballs to impact a lot of other metrics. So if we just go into the high yield credit cycles chart we have here for BTC, we can also see that this has drastically begun increasing recently, indicating, like we said, a more risk-on environment, not just for BTC, but for traditional markets and pretty much all assets in general, really. Once we see this high yield credit data begin increasing, it indicates that the demand for these higher yielding corporate bonds is increasing. So therefore, there's less demand for the US dollar, potentially because its value versus other currencies is decreasing. So as one affects the other, it's basically just coming down to supply and demand. The supply of US dollars is increasing, the demand is decreasing, the demand for other assets, such as high-yield corporate bonds, is increasing, and hopefully this risk-on sentiment leads to more favorable market conditions for BTC. We have actually, if we just go onto the S&P versus BTC chart, over the last few weeks, seen the S&P rally quite substantially, while Bitcoin has been stagnant. So this DXY decrease, the sentiment increasing, definitely is pointing towards better trading conditions for other assets like the S&P 500 and traditional US equities. So maybe Bitcoin does have a little bit of catching up to do, especially if you look at the S&P 500 versus BTC and their correlation. We can see that this correlation is actually continuing to increase. So really, Bitcoin is lagging behind slightly when it comes to price appreciation, given the fact that macro conditions are becoming considerably more bullish. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed here today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, we've recently seen the US dollar strength index, or the DXY, begin plummeting. And this is due to a decrease in demand for the dollar as supply has begun increasing, as well as a shift to a more risk-on sentiment for investors that we can see in the high yield credit sentiment. And historically, as these have been inversely correlated, now that the US dollar strength is decreasing, we really should expect to see the Bitcoin price increasing, but we're yet to see this at the minute. So potentially Bitcoin has a little bit of catching up to do, especially considering assets like the S&P 500 have been rallying recently and given their historic correlation. So really, these macroeconomic factors being incredibly bullish do lead to a positive outlook for BTC over the coming weeks and months. If you liked this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live chats, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin having more favorable economic conditions for the coming weeks and months. Do you think that this is actually very bullish for BTC, or do you think it's maybe blown out of proportion and BTC, being its own asset, will decide to go up or down regardless of what's happening in other markets? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.